Hello, I'm Tammy Green, and this is your Week in Forex from UFXBank. Well, it seems that many of the topics that we've been discussing the past few weeks are still dominating the headlines again this week. Greece is still in the spotlight as the euro is continuing its decline. It seems as though Germany has taken a hard stand against European support to this struggling economy. Considering that Germany is the strongest economy in the European Union, it seems the IMF will have to help Greece. Portugal gets a lower credit rating from Fitch, which has added to the euro's woes. Today we will review this and other highlights with financial analyst Martin Smith. Welcome, Martin.
Hello, Tammy.
So tell us, Martin, what is going on with the euro?
Well, I'm afraid it all comes down to that somewhat unflattering term, PIGS, the acronym for the countries saddled with huge debt, namely Portugal, Ireland, Italy, Greece and Spain. And right now, of course, the main focal point is Greece. The euro took a plunge and traded near a 10-month low against the greenback because of the rising concern that Europe's economic leaders aren't making any progress on debt relief for Greece.
Is this the same battle that you spoke of last week between Germany and France?
Exactly. In fact, one of Germany's spokespersons, Michael Meister, made it known that only the International Monetary Fund, the IMF, is equipped to help Greece at this point. He believes that rapid aid for Greece from European countries would only destabilize the euro in the long term. Germany seems to support the idea of Europe creating a European monetary fund to handle these problems in the future.
I know that the IMF is a UN function, but where is it based?
Well, actually, that's the cornerstone of the debate, I believe, because, of course, the IMF is based in Washington. Now, any appeal to this entity would surely be a bad omen for the stability of the euro, because it shows that Europe, essentially, is unable to regulate and handle its own economy.
I know that Germany currently has the strongest economy in Europe. Other than Michael Meister, have any other German officials spoken out about the debt problems?
Well, German Chancellor Angela Merkel also laid out terms along the same lines, that the IMF should support Greece and that members of the EU should be laden with this problem as a last resort. She was quoted as saying, in fact, that a good European is not necessarily one who rushes to assist. Well, she also made note of the trust her country and other countries have placed in the euro by giving up their own currencies, and that betrayal of this trust cannot be broken under any circumstances. What
about the other European nations that are also saddled with debt?
Well, most notably, Portugal's credit rating was downgraded last week from AA to AA- by Fitch, a leading credit agency. Now, this is mostly in reaction to Portugal's high level of debt. Although Portugal's budget was seen as credible, it was noted that the government must implement sizable consolidation measures in the next year, as well as reverse some of the stimulus measures that were enacted this year, so that the debt levels would get back to a manageable size.
What are some of the immediate outcomes of this credit rating downgrade for Portugal?
Well, essentially, it could mean that Portugal will have to pay higher yields on government bonds so as to attract investors. This will make borrowing money for this small country even more expensive. And this is despite the fact that, as of right now, we're not sure that other leading ratings agencies will follow Fitch's lead. Also, this downgrade will have a wider impact on the overall debt crisis in Europe right now, maybe even affect Europe more as a whole initially than it will just Portugal.
Last week, you spoke just briefly about the inflation problem in China. Are there any updates?
Well, China's again feeling pressure from the US to do something about their exchange rate policy. The Vice Minister of Commerce made it very clear that China won't succumb to foreign pressure regarding their currency. Much like how I had predicted last week, if you remember.
I do remember.
Right.
So what technicals do you have for us this week?
Well, let's talk about gold, shall we? After showing a head and shoulders formation, the head of this formation is close to $1,145. The right and left shoulders are close to 1,130, and the neckline is right at 1,100. Now, the break of the neckline last Wednesday, gold closed below this, now which was considered as a confirmation for a renewal of the bearish trend towards the downside. Gold also closed below the 50 and 100-day moving average, which is also a bearish signal. Now, $1,045 is the soft target, and we believe that gold should stay below 1,133 in order to keep this momentum. Now, I believe that the correlation between gold and the Aussie still has a very strong correlation. After the Aussie showed strength versus the US dollar compared to other major currencies, I believe that a drop in the price of gold will cause the Aussie to weaken. Both of them are showing many indicators for a renewal of the bearish trend in the long term.
Thank you, Martin, for joining us this week. Until next week, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook to submit your own questions to our weekly broadcasts. Please email your questions to Martin Smith at askthebroker@UFXBank.com.